hold on. Imagine waking up to gold hitting $5,595 an ounce. New all-time high, charts straight vertical, gold bugs screaming, "We made it! This is the super cycle." Then, 30 minutes later, total bloodbath. Gold plunges over 10% in one session. Silver gets absolutely annihilated, 26 to 36% down. Worst single-day crash since 1980. Bitcoin dips hard, liquidity evaporates, and everyone's hitting panic sell. What the hell just happened?
Exactly. I spent days digging through market data, central bank reports, geopolitical wires, and real-time chatter on X and Bloomberg terminals. And man, this wasn't a random crash. It looks like a perfect storm of financial shocks colliding with some seriously tense geopolitical moves happening at the exact same time.
Start with the obvious triggers. Bank of Japan holds rates at 0.75%, highest in decades, finally squeezing those massive yen carry trades. Traders who borrowed cheap yen to bet big on risky assets worldwide suddenly scrambling to cover, forced selling everywhere. But right on top of that, Trump nominates Kevin Warsh, a hardcore inflation hawk who hates endless money printing, as the next Fed chair. Market instantly prices in stronger dollar, higher real rates. DXY spikes. Non-yielding assets like gold get hammered. Classic double whammy. Here's where it gets wild. While all this was unfolding, Russia was ramping up massive recruitment efforts, huge bonuses, freeing prisoners, luring foreigners, planning to draft hundreds of thousands more troops in 2026 for the Ukraine front. China was in the middle of a shocking military purge, its top generals Zhang Yuxia and key staff under investigation for serious violations, leaving Xi Jinping with near total control of the People's Liberation Army. And Iran publicly declaring full war readiness. Any attack will be treated as all-out war, while the US sends a major naval armada into the region. Now connect the dots. Some analysts and market watchers on X are openly asking, was this synchronized pressure? Russia mobilizing, China purging its top brass, Iran on full alert, timed to create chaos in markets, to force a massive gold sell-off so BRICS nations could quietly accumulate even more physical gold at cheaper prices. Because while retail investors and leveraged funds were dumping, central banks in China, Russia, India, and Poland kept stacking gold like it's the ultimate insurance policy, diversifying away from US treasuries and chipping away at the petrodollar system. Global debt is sitting at $346 trillion. In a world this leveraged, these kinds of synchronized shocks could be the new normal. Is this just profit-taking after a parabolic rally, or the opening move in a bigger geopolitical financial chess game to slowly dethrone the dollar? The crash was brutal, but the real question is whether this was a healthy correction or the first visible crack in something much larger. We're breaking down every layer today. The carry trade unwind, the Warsh effect, the liquidity panic, the central bank gold stacking, and those wild geopolitical moves, with straight talk, data, and a little sarcasm so we don't lose our minds. You still with us? Good. Let's dive deep.
Okay, let's peel this onion layer by layer before our eyes start watering from all the drama. First layer, the yen carry trade unwind. For years, smart money, or should I say greedy money, borrowed yen at basically zero interest, converted it to dollars or whatever, and bought high-yield stuff everywhere. Stocks, crypto, you name it. Free lunch, right? Japan says, nah, rates at 0.75% now, pay up. Suddenly, everyone's margin calls are screaming. Traders dump whatever they can to cover yen loans. Boom, forced selling tsunami.
But that's not the only fire. Layer 2, Kevin Warsh. Trump picks this guy, former Fed governor, hardcore hawk, the kind of dude who thinks printing money is basically sin. Market hears Fed Chair Warsh and instantly bets tighter policy, higher real rates, dollar ripping higher. DXY jumps. Gold? A non-yielding shiny rock in a world where cash now pays more? Yeah, not sexy anymore. Sell button gets hammered. Silver, being the volatile cousin, gets nuked even worse, down 30 to 36% in one day, worst since the 80s. People were calling it the Widowmaker crash for a reason.
Now, layer 3, liquidity panic. Picture a crowded theater. Someone yells fire. Carry trade unwind starts the yell. Warsh nomination pours gas. Everyone runs for the exits at once. Buyers? Vanished. Gold gets dumped not because it's trash, but because it's the most liquid thing left when funds need cash yesterday. Hedge funds with leverage up the wazoo? Liquidated. Retail FOMO crowd? Panicking. It was like Black Friday meets a margin call apocalypse. Everyone selling, no one buying.
But here's the twist that makes your spine tingle. While the West was in full meltdown mode, dumping physical and paper gold like hot potatoes, who was quietly loading up the truck? Central banks, especially BRICS crew. China, Russia, India, Poland, even newcomers like Brazil and Kazakhstan. Latest data shows they've been stacking over 1,000 tons a year for 3 straight years, more than double the old average. China's PBOC alone bought for 13+ months straight into late 2025, reserves pushing past 2,300 tons. BRICS collectively, around 6,000 tons now, and they're controlling half the world's gold production. Why? Because they're done relying on US debt as the safe reserve. Gold has no counterparty risk. Hold it, it's yours.
And that ties straight into the petrodollar erosion. Dollar's share of global reserves dropped from 71% in 2008 to about 56% now. Central banks flipping to gold over treasuries for the first time in decades. Value-wise, gold holdings just overtook US bonds in some metrics. BRICS even piloting the unit trade instrument backed by gold. Slow burn de-dollarization or full chess move? While everyone's screaming about the crash, these guys are buying the dip like it's Black Friday for bullion.
Now crank the tension. All this financial chaos exploding right as geopolitics goes nuclear. Russia ramping recruitment hard, massive bonuses up to $50,000 in some regions, freeing prisoners, luring foreigners with citizenship promises, targeting 400,000 plus new troops for 2026 Ukraine push. China, mid-purge of its top brass. General Zhang Yusaya, Xi's longtime ally and vice chairman of the Central Military Commission, suddenly under investigation for serious violations. Chief of Staff Liu Zhenli, too. Xi's grip on the PLA tighter than ever or paranoid as hell?
Iran straight up declaring 200% war readiness. Any U.S. attack means all-out regional war. U.S. sends the Abraham Lincoln carrier group plus destroyers right into striking range. Strait of Hormuz exercises, threats to choke shipping, oil prices spiking on fear alone. All this syncing up exactly when markets are already on edge from Fed drama and carry trade blowup.
Coincidence? Or coordinated pressure cooker to force a gold fire sale so BRICS can scoop cheaper physical while the West freaks out? Some traders on X are straight up saying this dip is a reload for the long game. Global debt at $346 trillion, one big synchronized shock away from systemic cracks.
So is this the end game for petrodollar dominance? Or just another volatile Tuesday where leveraged players got wrecked and patient stackers win again?
We're not done yet. Next layer, what happens when the dust settles? Stick around, this gets even crazier.
All right, we've built up the storm. Now let's see if the sky really is falling or if it's just another market tantrum with extra geopolitics spice. Reality check time. Was this the perfect storm that ends the dollar era? Or did everyone just get too hyped after gold mooned 30% in January alone? Silver up 70%. And then bam, profit-taking hits like a freight train.
Let's be real. The trigger everyone points to? Kevin Warsh. Trump nominates this inflation-fighting hawk for Fed chair. Market goes, oh crap, no more endless printing, rates might stay high longer, dollar stronger. DXY spikes, real yields up. Gold, zero yield shiny metal, suddenly looks like yesterday's news. Gold drops 11-12% in a day from near $5,600 to around $4,700, $4,800 settle. Silver, absolute massacre. 30 to 36% plunge, worst single day ever recorded. Bitcoin wobbles to mid-80s, then lower. Not apocalypse. Classic overextended rally correction.
Yeah, but the conspiracy crowd loves the timing. All this financial fireworks exploding right as geopolitics turns into a powder keg. Russia, they're cranking recruitment to 11, targeting over 400,000 new troops for 2026 Ukraine push. Bonuses up to 50K in some spots. Freeing prisoners, luring foreigners with fast-track citizenship. Desperate or just business as usual in year 4 of the war?
China, even wilder. Xi's purge hits the top. General Zhang Yusaya, Xi's longtime ally, vice chairman of the Central Military Commission, suddenly under investigation for grave violations. Chief of Staff Liu Zhenli, too. CMC now down to just Xi and one political commissar with zero combat experience. Xi's grip tighter than ever, or is the PLA in total disarray right when tensions are peaking?
Then Iran lights the fuse, announces live-fire naval drills right in the Strait of Hormuz, the choke point for 20% of world oil, while the U.S. parks the Abraham Lincoln carrier group plus destroyers in striking range. IRGC warns any unsafe moves won't be tolerated, but both sides are flexing hard. Oil spikes on fear alone, all syncing up exactly when markets are already deleveraging from carry trades and margin calls.
So connect it? Forced gold-silver dump creates cheap physical for BRICS to scoop. Central banks, China, Russia, India, Poland leading, stacked over 1,000 tons a year recently, way above historical averages. China's PBOC bought for 14-plus straight months into late 2025. Reserves past 2,300 tons now. BRICS total around 5,700, 6,000 tons now, controlling half global production. They're not just buying, they're building alternatives, piloting the unit gold-linked trade system, shifting oil deals to yuan or rupees, dollar reserves down to 56% globally from 71% in 2008.
Petrodollar erosion in slow motion. Gold overtaking U.S. treasuries and some reserve metrics for the first time in decades. No overnight kill, but steady bleed. And with global debt at $346 trillion, one big synchronized shock, financial plus geopolitical, could crack the system wide open.
But here's the cold shower. Most analysts call this 70% probability a temporary flush. Leveraged hedge funds and FOMO retail got wrecked, healthy deleveraging after parabolic gains. Gold bugs panic sold the dip, while patient central banks quietly reloaded. The other 30%? Regime shift. De-dollarization accelerates. Gold becomes the new anchor in a multipolar world.
So is the bull run dead, or was this just the mother of all shakeouts, clearing weak hands before the next leg up? Central banks aren't dumping, they're stacking harder than ever.
Exactly. The crash hurt, but the fundamentals? Geopolitics tense, debt insane, dollar dominance slipping. This dip might be the reload button for the long game.
We've got one more layer to hit. What happens next, and the real takeaway for anyone still holding or thinking about jumping in?
Don't go anywhere, the conclusion's gonna hit different.
Whew, we've gone through the whole storm. The carry trade blow up, Warsh turning the Fed hawkish, liquidity vanishing like it owed someone money, central banks quietly stacking while everyone else panics, and geopolitics cranking the heat with Russia drafting 400K more troops, China purging its top generals left and right, Iran flexing in the Strait of Hormuz right as U.S. carriers park nearby, global debt at $346 trillion? Yeah, one wrong move and the whole thing could crack.
But let's cut the drama for a second and land this plane. Reality. This crash on January 30th, 2026, gold from near $5,600 to around $4,700, $4,800, silver nuked 30 to 36%, worst days in decades, was brutal. No sugarcoating it. But was it the end of the world? The death of the petrodollar? The start of BRICS taking over? Nah, not quite yet.
Most analysts, from UBS raising gold targets to $6,200 later this year to Standard Chartered calling it inevitable correction, say 70% chance this is just a healthy flush. Parabolic rally gone wild. Gold up 30% in January alone. Silver 70%. Overbought, overleveraged hedge funds and FOMO retail got wrecked. Profit taking after the moonshot, margin calls cascading, buyers ghosted. Classic Wall Street shakeout. Weak hands out, strong hands reload. The other 30%? That's the regime shift wild card. BRICS stacking gold like it's candy, over 6,000 tons combined reserves, controlling half global production. Dollar share and reserves down to 56%, the unit gold-backed pilots rolling out for trade settlements. Petrodollar bleeding slow but steady. Oil deals in yuan, rupees, whatever avoids Uncle Sam's grip. Geopolitics? Russia recruiting hard with bonuses and prisoner deals. China purging Yang Yuxia and Lu Zhenli, leaving Xi with a skeleton CMC crew. Iran live firing in Hormuz while U.S. armadas circle. Tensions high, but no one's pulling the trigger yet. Bottom line, this dip wasn't manipulation to kill the dollar overnight. It was market overreacting to Warsh's hawkish vibe easing Fed independence fears, plus deleveraging after insane gains. Central banks didn't panic sell, they bought the dip quietly. Gold bugs who sold low? Ouch.
Patient stackers and nations like China, Russia, India, smiling.
So what now?
If you're in gold or silver, don't FOMO back in at the bottom thinking it's moon time tomorrow. This could chop sideways or dip more before the next leg up. Geopolitics volatile, debt insane, dollar's still king but slipping. But long-term, fundamentals scream bullish. De-dollarization creeping, central banks hoarding, uncertainty everywhere. Gold isn't dead, it's reloading. Moral of the story, folks, markets are a casino, not a church. When two big triggers hit at once and everyone screams apocalypse, take a breath, check the data, and don't sell your wife's jewelry on red days. Laugh at the hype, stack smart, and stay patient.
If this roast of the 2026 gold crash kept you hooked, the carry trade panic, Warsh shock, BRICS quiet power move, geopolitics spice, smash that like button right now. Drop a comment. What should we roast next? Bitcoin's next dip, stocks, or more doom or finance drama? Tell us if you're still holding gold through this mess or if you sold the top like a boss. Your stories fuel the next video.
And if you want more savage breakdowns like this, no BS, just real talk with sarcasm, hit subscribe and ring the bell. We drop these whenever markets go nuts, so don't miss the next one. Could be tomorrow if Iran or Russia drops another bomb.
Thanks for riding this roller coaster with us. Stay sharp out there. Don't get wrecked by hype, and we'll see you in the next one. Peace.
Later, legends.